What is happening, crypto crew? The digital asset universe is absolutely exploding with news, and if you're not plugged in, you're missing out on the action. We're talking seismic shifts, bold plays, and market movements that are rewriting the playbook. Get ready, because we've got the inside scoop on the stories that are defining the future, right here, right now. This is your essential update, the pulse of the market, delivered at lightning speed. Don't blink, you won't want to miss a second of this. Let's dive in. First up, we're heading south to El Salvador, a nation that's been making waves with its pioneering approach to digital currency. They've been strategically building their reserves, and the implications for emerging markets are huge. What does this bold move mean for global financial landscapes and the credibility of nations embracing digital assets? We've got the deep dive. Then, we're jetting over to Japan, where a company is making some serious noise in the Bitcoin whale arena. We're talking about massive accumulation targets, pushing the boundaries of corporate holdings. Are they playing it safe or going all in? We'll break down their ambitious strategy and what it means for the broader market sentiment. Next, we're looking at the intricate dance of Bitcoin's price action, caught between historical patterns and future projections. Is Red September a real threat, or are upcoming economic indicators set to propel us to new heights? We'll dissect the technicals, the macroeconomics, and the expert predictions that could shape the market's trajectory. And finally, we're circling back to Japan to examine the high-stakes strategy of a firm that's making bold moves in the Bitcoin space. While their treasury is growing, there are whispers of risk and market scrutiny. We'll explore the dual narrative of growth and potential pitfalls. Stick around, because this is the Bitcoin Bulletin, and you need to be subscribed. Hit that subscribe button, ring that notification bell, and let's get this episode rolling. El Salvador's bold Bitcoin gamble. El Salvador has once again positioned itself at the forefront of digital currency adoption, this time with a strategic focus on building its Bitcoin reserves. This move is not just about accumulating a new asset. It's a calculated strategy with potentially far-reaching implications for the credibility and financial standing of emerging markets on the global stage. As nations worldwide grapple with inflation, currency devaluation, and the need for financial innovation, El Salvador's embrace of Bitcoin as a reserve asset offers a compelling case study. The Central American nation first made headlines by adopting Bitcoin as legal tender, a decision that was met with a mix of skepticism and admiration. Now, its continued efforts to bolster its Bitcoin reserves signal a deepening commitment and a belief in the long-term value proposition of the cryptocurrency. This strategy is particularly significant for emerging markets, which often face challenges related to capital flight, limited access to international financial markets, and a reliance on volatile fiat currencies. By diversifying into Bitcoin, El Salvador is attempting to hedge against these risks and potentially enhance its financial sovereignty. The implications for emerging market credibility are multifaceted. Firstly, a successful Bitcoin reserve strategy could pave the way for other developing nations to explore similar avenues, potentially leading to a broader adoption of digital assets in national treasuries. This could democratize access to financial tools and reduce dependence on traditional, often opaque, international financial institutions. Secondly, it challenges the established norms of reserve management, which have historically been dominated by a few major fiat currencies. If El Salvador's strategy proves effective in stabilizing its economy and attracting investment, it could force a reevaluation of reserve asset classes globally. However, the strategy is not without its risks. The inherent volatility of Bitcoin means that a significant drop in its price could impact El Salvador's financial stability. Critics often point to the potential for substantial losses, especially for a nation with limited resources. Furthermore, the regulatory landscape for digital assets is still evolving, and international bodies may impose stricter controls or sanctions on countries pursuing such unconventional monetary policies. The success of El Salvador's strategy will hinge on its ability to manage these risks effectively, maintain fiscal discipline, and continue to foster economic growth alongside its Bitcoin holdings. Audience impact. This bold strategy has ignited widespread debate within financial circles and among the public. with discussions ranging from cautious optimism about financial innovation to deep concern over the potential economic repercussions for El Salvador and other emerging markets considering similar paths. Can El Salvador's bold Bitcoin strategy truly reshape the future of emerging market finance? Stay tuned as we uncover how a Japanese company is aiming to become a Bitcoin whale and what that means for the market. Japan's Bitcoin ambitions take flight. In a move that's capturing the attention of the global financial community, Japan's Metaplanet is aggressively pursuing a strategy to amass a colossal Bitcoin treasury, aiming to become one of the world's largest corporate holders. This ambitious undertaking involves significant fundraising and a clear objective: to secure 30,000 BTC by the end of the year. This isn't just about acquiring a digital asset. It's a strategic play to protect assets and hedge against market volatility, mirroring a growing trend among institutional investors. Metaplanet's journey into becoming a major Bitcoin player has been marked by substantial acquisitions. Recently, the company purchased an additional 1,009 BTC, valued at approximately $112 million, at an average price of $102,607 per Bitcoin. This acquisition propelled its holdings to a significant 20,000 BTC, establishing it as the sixth largest corporate holder of Bitcoin globally and the undisputed leader in Japan. This aggressive accumulation strategy has placed Metaplanet in direct competition with other major corporate Bitcoin holders, showcasing its determination to scale its digital asset portfolio rapidly. The company's strategic vision extends beyond mere accumulation. It's focused on asset protection rather than speculative trading. This approach aligns with a broader institutional trend where companies are looking to diversify their treasuries and hedge against the uncertainties of traditional financial markets, including inflation and geopolitical risks. By holding Bitcoin, Metaplanet aims to safeguard its assets against potential currency devaluations and market downturns, positioning itself as a resilient player in an increasingly unpredictable economic climate. To fuel this aggressive accumulation, Metaplanet is planning a substantial fundraising initiative. A shareholder vote is on the horizon, which could unlock a dual-class share structure and facilitate a $555.88 billion fundraising effort through international share offerings. This capital infusion is earmarked primarily for accelerated Bitcoin acquisition over the next few months. Furthermore, the company has already secured $87 million in institutional funding for its Web3 initiatives, demonstrating a broader commitment to the blockchain ecosystem. These moves underscore Metaplanet's confidence in Bitcoin's long-term value and its unwavering pursuit of becoming a dominant force in the digital asset space. The market's reaction to Metaplanet's strategy has been notable, with its stock performance increasingly reflecting Bitcoin's price movements. This correlation is reminiscent of how other publicly traded companies, like MicroStrategy, have seen their equity values tied to their Bitcoin holdings, signaling a broader acceptance and integration of digital assets into corporate treasury strategies. Audience impact. This aggressive accumulation strategy by Metaplanet has sparked considerable discussion, with many watching to see if this approach to asset protection through Bitcoin will become a more widespread corporate trend. But is Metaplanet's high-risk, high-reward Bitcoin strategy sustainable amidst market volatility? Prepare yourself as we analyze Bitcoin's critical juncture, where market sentiment, economic policy, and historical cycles collide. Metaplanet's high-stakes Bitcoin strategy under scrutiny. Metaplanet, a prominent player in Japan's burgeoning Bitcoin treasury landscape, has significantly bolstered its digital asset holdings, now commanding an impressive 20,000 BTC. This latest acquisition, a substantial 1,009 BTC valued at approximately $112 million, was executed at an average price of $102,607 per Bitcoin. This strategic move has cemented Metaplanet's position as the sixth largest corporate Bitcoin holder globally and the foremost in Japan, according to Bitcoin Treasuries Net. The firm reports a healthy 6.75% profit margin on this latest acquisition relative to Bitcoin's prevailing market price, underscoring the effectiveness of its timing. This expansion of Metaplanet's Bitcoin portfolio is part of a deliberate strategy to align with pioneers like MicroStrategy, who have championed the corporate Bitcoin treasury model. The company's BTC yield for the quarter ending September first reached an impressive 30.7%, a metric used to gauge the relative value of its Bitcoin holdings against its fully diluted share count. Metaplanet has demonstrated remarkable growth throughout 2025, escalating its Bitcoin holdings from 13,000 BTC in June to the current 20,000 BTC by early September, signaling a clear and aggressive accumulation phase. To finance this ambitious expansion, Metaplanet has undertaken significant financial maneuvers. The issuance of 11.5 million new shares following an investor's exercise of warrants has provided crucial capital. These funds, alongside proceeds from bond redemptions, have been instrumental in its Bitcoin buying spree. Notably, a key investor, Evo Fund, has acquired a substantial stake, purchasing 10 million shares at $5.67 and an additional 1.5 million at nearly $6, collectively representing approximately $65.73 million. Looking ahead, Metaplanet is seeking shareholder approval for the issuance of up to 555 million preferred shares, a move that could potentially raise as much as $3.7 billion, further fueling its aggressive Bitcoin accumulation strategy. However, Metaplanet's impressive Bitcoin buildup is juxtaposed against significant market headwinds. The firm's share price has experienced a considerable decline of 54% since mid-June, raising valid concerns about the sustainability of its current fundraising model. Analysts caution that this falling stock valuation could diminish the incentive for warrant exercises, potentially constricting the company's liquidity and its capacity to continue acquiring Bitcoin. This situation highlights the inherent volatility and risks associated with the corporate Bitcoin treasury model, particularly during periods of market downturn or underperforming equity valuations. Adding an international dimension to its strategy, Metaplanet has appointed Eric Trump as an advisor in March 2025. His scheduled attendance at an upcoming shareholder meeting in Tokyo signifies a strategic push to elevate the firm's global profile and align it with international digital asset trends. The involvement of the Trump family in the cryptocurrency sector further accentuates the growing institutional interest in corporate Bitcoin strategies, especially in light of persistent inflationary pressures and evolving monetary policies. Audience impact: Metaplanet's dual narrative of aggressive Bitcoin acquisition and a declining share price has sparked intense debate about the viability of its strategy and the broader risks faced by corporate Bitcoin holders. But how do these corporate plays stack up against the broader market forces shaping Bitcoin's future? Get ready as we break down Bitcoin's critical juncture, where market sentiment, economic policy, and historical cycles collide. Bitcoin at a critical juncture, navigating market headwinds. Bitcoin is currently navigating a complex phase, trading near $108,500, a level that reflects a mixed short-term momentum despite achieving all-time highs above $120,000 earlier in 2025. While the year has been bullish, driven by institutional adoption and significant ETF inflows, the prevailing sentiment now points towards bearish short-term pressures. Analysts are actively recalibrating their price predictions as the market grapples with a confluence of factors that could dictate its near-term trajectory. From a technical standpoint, Bitcoin appears to be consolidating within a falling trend channel, a pattern that typically signals diminishing buying interest and potential downside risk. The immediate support level is identified at $101,300, with resistance looming at $110,000. Although the Relative Strength Index, RSI, has dipped below 30, historically indicating oversold conditions that could precede a rebound, the current RSI curve appears to reinforce the bearish trend. This suggests that, in the short term, the outlook for Bitcoin's price remains cautious. Several macroeconomic and historical factors are contributing to this market uncertainty. The recurring pattern known as Red September, where Bitcoin has historically experienced an average loss of 3.77% over the past 11 years, adds a layer of psychological pressure. Compounding this is the anticipation surrounding potential Federal Reserve rate cuts, with a 90% probability of a cut expected, alongside the release of key U.S. economic data, all of which are poised to heighten market volatility. Furthermore, significant ETF outflows totaling $751 million suggest a degree of institutional caution, even as whale wallets, large volume holders, have reached record highs, indicating accumulation at lower price points by some major players. Market analysts are closely monitoring key technical levels. A decisive break above $112,000 could signal a bullish resurgence for Bitcoin, whereas a drop below the $110,000 mark might precipitate a deeper correction. The 50-day and 200-day exponential moving averages, EMAs, situated around $110,000 and $104,000 respectively, serve as critical reference points. Should Bitcoin manage to hold these levels, it could potentially set the stage for a significant rally, with projections reaching $140,000 to $200,000 by year-end. Supported by favorable macroeconomic tailwinds, the anticipation of the upcoming halving event, and robust on-chain metrics. On-chain data further illustrates the dynamic market conditions. The adjusted cyclical extremum index at 8.8% suggests the market is entering a compression zone. The long-term holders continue their accumulation trend, evidenced by declining exchange reserves, which implies reduced selling pressure and sustained conviction in Bitcoin's long-term value. Miner reserves remain stable, contrasting with previous cycles where miner selling often coincided with market peaks. The upcoming FOMC meeting, with expectations of a 50 basis point rate cut, could also prove beneficial for risk assets like Bitcoin, potentially making it a more attractive inflation hedge. Audience impact. This analysis of Bitcoin's current market crossroads has generated significant buzz, with investors weighing the risks of Red September against the potential upside from Fed policy and long-term holder accumulation. Now that we've covered the key market movements, let's summarize the top stories and what they mean for you. All right, that's a wrap on today's explosive crypto news. We saw El Salvador doubling down on its Bitcoin strategy, Japan's Metaplanet making huge moves to become a Bitcoin whale, and Bitcoin itself navigating a critical juncture of market forces. Don't miss out on any of the action. Smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto insights, and ring that notification bell so you're always the first to know. Follow us on all social platforms for more updates. We'll see you in the next one.